down. We'll revisit those rates. But let me now welcome on board Pranav Amin, the Managing Director at Alembic Pharma, to talk about how their quarterly performance was. Pranav, great to have you today on ET Now. Give us a rundown of what transpired during the quarter and how the performance was for the fiscal in Q4.
Absolutely. Thank you for having me on. So it was a good quarter for the company. I think you have to take a look at it. I think the underlying operational priorities and what we set out to do has been pretty good. In terms of the revenue, if you see for the quarter, revenue was up 4% whereas PAT was up by 29% to 200 crores. The EBITDA pre-R&D also went up by 8%. In terms of an annual basis, the revenue was up 10% to 7,345 crores. We saw growth across all our territories, with India at 5% growth, US grew 13%, ex-US grew 13%, ex-US grew 20%, whereas the API business grew 5%. So overall, it was a good quarter for us, which, we're at an inflection stage we're seeing where operational priorities and long-term investments. So it was a good quarter for us.
Pranav, if you look into the financials, R&D spend jumped nearly 39% in Q4 due to one-off peptide development. How should investors look at this entire R&D spend and the going run rate for that into FY27?
Yeah, so it's a good question. I think so. Let's take the peptide bit first. I think this quarter was the R&D cost in this quarter was a one-off. It was a little higher at 11% of revenue. I think we had guided for about 750 crores for the year, but 650 to 700, we've landed up at 700. So it was a little higher than we had expected. Part of it is because we had some of these peptide NCE-1 filings, which are a little more long-term, but we had to get the filings done right now and then the batch is done. Apart from that, we had some other one-time investments in R&D, which is not going to be a recurring theme. In terms of a recurring theme for R&D, we will stick to about a 9% kind of number that we've been at for the last year or so.
But this exceptional item, which impacted your P&L by about almost 6.7 billion rupees for the full year, what exactly are these expenses and are they recurring in nature?
Right, absolutely. So there's a couple of things. So one is, as you know, we are foraying into the branded segment in the US. And to do that, we've launched a branded field force. We have in-licensed a product for urinary tract infections for women for the US market. It's called Pivya. So we just launched that product in the end of February. But for that, we've got the infrastructure all set up. We've got the field force who are going to be selling it. So that is there. Whereas the revenue pickup will take a couple of quarters. So that is why we had one-time expense because of that. The other one-time expense on the yearly basis was this recent labor code changes, which caused some of those expenses.
Pranav, regarding your first branded product, Pivya, what commercial infrastructure have you built around the product and what kind of revenue contribution you expect in FY27?
Yeah, I think so. Number one, we haven't given a revenue guidance for it. It's still early days. It's just been a couple of months since we launched the product, but this is very exciting because it gives us a foray into the branded space in the US. We have a field force of about 30 people already there. We're going to onboard more as we go along. And I think they started the promotion. It's an interesting space. We've got a good feedback from the doctors. And the whole strategy is that how do we build up this business? And we've housed it under a company called Alembic Therapeutics, which is a 100% subsidiary of Alembic Incorporated. And we're doing not just Pivya, we're in the process of in-licensing a couple of other products as well. So hopefully that'll build up into a nice play. Only thing, as I mentioned, since it's a branded play, it'll take a couple of quarters for it to play out.
And your Indore facility just received that WHO certification as well. How quickly can it be ramped up and what revenue contribution is expected for the full year?
So in terms of, we don't give facility-wise guidance, I think, but overall, if you see where the business is, let's take the international business first. I think US grew this year at 13% already. So we expect at least a 10 to 15% growth in the US business. Our rest of the world business has already been doing 20%, or if you say CAGR, last 3-4 years, the CAGR has been over 20%. So expect over 15% growth for the rest of the world business. API would be in high single digits to a 10% growth. The India business was about a 5% growth. I think amongst that, there are some segments which have done particularly well, where some need improvement. So I'm confident that this year, with the changes that we're doing, the India business will also come to growth. So overall, at the corporate level, we should see a decent growth, at least a 10% growth in the top line revenue for Alembic. In terms of facilities, you asked about facilities. So Indore facility, we've already started moving the products from our Sikkim facility to Indore. So it's already, in terms of capacity utilization, it's already at about 40-50%. So there's no issue there. It's already contributing meaningfully to revenues. Apart from that, we had new facilities for onco, injectables, general injectables, ophthalmics. Those also have seen a significant improvement in the utilization levels. And as we go along, this will lead to a higher margin for the company as well.
Pranav, you had acquired Utility Therapeutics. What kind of products and capabilities will this bring in, and can you also give us a indication of the kind of timeline for the integration of this facility?
Right. So this is what I was talking about, the branded business earlier. So Utility, it's what we've acquired is just the asset, which we're going to launch in the US. All the products comes from a CMO, so there's no manufacturing assets. It's just the IP on the product. So we have started selling this while the transaction was closed in 25. The marketing and the and the detailing started only in end of February. So just been a couple of months, and we're hopeful that this will build into a nice branded play for the company.
Right. Okay, Pranav, great to have you today on the show. Thank you so much for your time today. While we wait